Hi, everybody, and welcome back to my Friday Focus series, in which I apply the tenets of SVA to current stock market conditions. My name is Ross Healy, and I am the chairman of Strategic Analysis Corporation, an investment advisory company with a very unique take on the investment process. Last week, I took a shillelagh to Telus for their dividend policies. My analysis caused a certain amount of pushback from viewers who thought that the company would be able to muddle through somehow. That somehow being the operative word, I suspect. I promised you that I would take a look at the two main alternatives to Telus, BCE and Rogers Communication, to see if they offered any better value than Telus. So that's what I'm going to start to do today. But first, let's review Telus. We saw here where the stock price and the fair market value had come together, in other words, offering no upside. And at the same time, we looked at the dividend, which was $1.67 versus the earnings of $1.06 this year and only 77 cents last year. Small wonder that we were looking at a valuation, that is to say, a price to book that was fallen. So today we are going to take a look at BCE and Rogers. Well, let me start with BCE, which did have the courage to slash its excessive dividend and see what transpired afterwards. Now, it acquired a company called Ziply Fiber, based in Kirkland, Washington, serving the U.S. Pacific Northwest, for which they paid $5 billion in Canadian cash for the equity, and also assumed approximately Canadian $2.6 billion in outstanding debt for a total cost of approximately $7.6 billion. The acquisition was completed on August the 1st, 2025. BCE largely funded the purchase from the proceeds from the sale of its stake in Maple Leaf Sports and Entertainment, MLSE, resulting in a nice gain, which you can see here. That's that big jump right there. Now, BCE stated that Ziply Fiber was expected to generate a standalone adjusted EBITDA of more than Canadian $400 million for the full year 2025. Now stop. Allow me to observe that whenever a company uses EBITDA as a market marker of profitability, my hackles rise. Because in my books, EBITDA really means earnings before everything. and then what does that measure? So BCE has spent $7.6 billion to get back a shaky $400 million in dubious earnings. That amounts to an return on equity, an ROE of 5% versus the current implied ROE of 11.4%, which we show over here. Now, what am I missing from this story? Count me as being in the show me camp when it comes to congratulating the company on an astute move. Why would I buy BCE? Frankly, it needs to shake down before I would touch it. Well, okay, how about Rogers? Kind of like BCE and Telus, we see a high valuation in the past, falling steadily down. So what's going on here? Well, what about Rogers? They paid $4.7 billion for BCE's 37.5% ownership stake in Maple Leaf Sports and Entertainment. That makes Rogers the majority owner of MLSE, holding a 75% interest. Now, I will have to say, given the egregious 150% increase in the price of the Blue Jays tickets that Rogers wants to charge its club membership this coming year, perhaps this is one heck of an investment for Rogers. And the share valuation is certainly not bad. As you can see, the high conservation price, or 1.5 times book, has been a 22-year low for the shares, and so far the shares have been holding in here, even with that sharp increase in the book value. My sole concern is that if I click on the price to book key, we can now see the ROE trend. And here we go. And look at that, eh? The ROE trend has been trending lower and lower and lower, and when the ROE trend goes lower, so does the price to book valuation level. And unfortunately, this shows no sign of abating as of yet. You can clearly see that as the ROE has slipped lower, so has the average price to book valuation. I'm not saying that we should necessarily be alarmed, but if I were an investor here, I would like to see that the HC price, 1.5 times book, can support the share valuation, can hold it in, and it is right there. And I would also like to see that the ROE can start to trend higher. So bottom line, I'm quite skeptical about the outlook for BCE, but Rogers may be an alternative to your Telus holdings. However, please keep a close eye on its valuation at the HC price. Anyway, that's it for today. Next week, I'm celebrating my Never You Mind birthday, and we are taking the week off. But I will be back on Friday, December the 12th, with another edition of Friday Focus.